let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome back to Galaxy Brains.
Thanks for having me.
Oh, man, it's been exciting. I haven't been in New York in a few weeks, and I'm still not. But gosh, Friday night last week, October 10th, I was in the air and I fell asleep for about 30 minutes. Bitcoin is 121,000. I woke up and had to like double take 108 is what I saw at one point. I know it went a little bit lower. All of this, though, we're not going to do a whole rehashing of that flash crash. Galaxy Research has published a research report with some of our rehashing of that. But let's talk about the underlying cause, which was tariff tantrum 2.0. Trump posted something broke down between him and Xi, although it seemed like mostly on Trump's side based on some of the stuff coming out of Beijing. He threatened 100% tariffs on China enacting November 1st. That set off what? A massive dump. And obviously in crypto, it was mostly after hours. Let's focus on how it's gone since then. It's Wednesday, October 15th at 2:30 p.m. Eastern. How's it been going since that tariff tantrum?
Well, Trump immediately walked things back over the weekend, essentially saying that the China situation will be fine. And you've had, Trade Representative Greer and Bessent kind of, talk things down a little bit. However, what's interesting this time is the Chinese seem to be a little bit more aggressive, right? The additional tariffs were announced because of new formal guidance issued by the Ministry of Commerce regarding, export controls on rare earth metals, and there was some other things like a retaliation for some of the ship stuff that's been going on as well, and you know I think if you're in the US, you should be very concerned because, the Chinese seem to have a willingness to go all the way. In fact, that is what they said this week, where, if they choose to fight, if the US chooses to fight us, then they will take it all the way and fight us in terms of trade. And so, I think you're at the point where, like, either Trump backs off, or it escalates, and it's a pretty binary outcome. Um the the kind of my baseline is that there is some sort of resolution that isn't really negative, because the ultimate premise around trade is that nobody would trade unless it was mutually beneficial, right? And so, when two of the largest economies in the world don't trade, both parties end up worse off. And so, I think with that in mind, I think there will ultimately be a resolution. It's just a question of, like, who backs down first, and can they do it in a way that kind of saves political face. Yeah, that's kind of my guiding philosophy, and I think risk markets are probably not appreciating how aggressive the Chinese are being in this tariff tantrum.
They're kind of mostly focused, it seems like, the risk markets. I mean, stocks opened okay on Monday, even crypto. Bitcoin bounced back to 115. I think as we write this, what we're trading around 111 or something like that, as we say this on Wednesday. But they seem to be mostly just discounting the Trump side of this, saying, well, Trump's come out hard and then walked back so many times. But you're saying don't underestimate the sternness of the Chinese, the seriousness of the Chinese don't seem that willing to bend here.
Correct.
And this rare earth thing, real quick. This, you're right. I'm happy you pointed this out. This is the Chinese produce what the largest producer of things like what, lithium, uranium, like what else are we talking? What other earths?
All sorts of things that are in
weird
so
metals
many
that you need
different
for
everyday
technology.
products. Yeah,
Yeah.
like between cell phones, automobiles, air conditioners, like certain plastics, like you name it. If there's a rare earth metal that's needed for a processed good, there's a high likelihood it came from China.
And so they signaled that there would maybe be some tightening. You said export controls, so possibly even reduced exports, not just like.
So I believe the stat so far, before this formal guidance came out, rare earth exports in China were down by 33% in September. And so you already had kind of, the tea leaves, and this is from like Chinese data, so I don't know if it's accurate or not. But like they were already kind of like constricting that supply. And if you really think about it, like if we're moving towards a more isolationist world, um, you kind of want to leverage your strengths sooner rather than later, right? Before the U.S. has like enough like critical mass in terms of like rare earth metal supply that they can like securely source for their industries and defense, etc. So like when you have the leverage is kind of now, when we haven't kind of shored up that domestic production or trade with other places that have it. And so I feel like the Chinese strategy is actually pretty good. um and it kind of seems like, there's a lot of chatter around, does the administration really have appetite for equities correcting? Because, a full-blown 100% tariffs, additional tariffs on November 1st, right? That would definitely send markets a lot lower. That would increase unemployment. That would drive inflation higher. And so, essentially China's like telling, Trump that like they will take it there, and the consequences are you're going to not be popular domestically because markets will be tanking. And if you don't want that to happen, you are going to have to concede to the Chinese. And so that leaves you in a little bit of a quagmire, sticky situation. And ultimately, I think it's going to take two to taco. I'm borrowing this phrase from somebody else, but I really like it. It's going to take two to taco, essentially.
Yeah, that's hilarious. Let's also talk. I just want to. I don't know if you. Why has China got all these rare earths? Because I'm surely we've got them too, and we've got one of the most diverse topographical maps in the world. Right, incredible geography in the United States. It surely must just be that we haven't developed them. Right.
I mean, I think there's some element of that. But again, I'm not like a rare earth person or geologist or,
Damn it.
one of those types of people. So I'm not exactly sure. But, the whole idea is that like building out those capabilities takes time. And you can't just be like, "Oh, there's a deposit there. I'm gonna just start mining it." But because like there are multiple stages to like taking a rare earth like from the ground and making it processable for like goods, right? And so like there's a whole lot of things that go into it outside of just like having the resource. And so we are behind. Um, Now, like in an ideal world, that is what trade is meant to do, right? Trade is meant to be like, oh, I am America. I have tons of wheat and soybeans. You want some of my wheat and soybeans. I want some of your rare earth metals. It's cheaper for me to, produce rare earth metals on a relative basis than it is for you to, produce soybeans. So we trade and everybody benefits, right? Like that's the beauty of it. And, I get the premise of like, trade policy's been more skewed towards, foreign places, just historically because the tariff rates on U.S. imports into their nations have been higher. There's been a lot of intellectual property theft, etc. But that doesn't necessarily mean that you need to recoup all of the past losses with like high tariffs now, because it just leads to like very suboptimal like outcomes for everyone.
All right, let's go into your something you are an expert and or at least a professional hobby horse in, which is the U.S. Federal Reserve. Jay Powell said on Tuesday, so that's yesterday as we record, that the end of the central bank's long-running effort to shrink the size of its balance sheet may be coming into view. He specifically said he was asked if whether they might there might be enough liquidity in the financial system to allow for firm control of short-term rates and normal money market volatility. Powell said we may approach that point in coming months, and we are closely monitoring a wide range of indicators to know if it's happened. He's talking about ending quantitative tightening. Is that right?
Yeah, he is. But it's
What does
already
that
like
mean?
essentially, like the Fed will stop reducing its balance sheet and it will keep it flat. It'll reinvest proceeds as, securities mature. And essentially, he's doing that because the front end of the money market is drying up a little bit, and that's largely a function of just a crazy amount of treasury issuance. I think in October alone, you're expected to get $150 billion in additional bills beyond what's maturing, and just in T bills, and then in notes, bonds, and other securities that the Treasury issues. I think you're talking about another $150 billion in supply, right? And so if you're talking about a month where you're going to need $300 billion worth of cash in the market to buy all the new treasuries that the government is issuing, like you're net draining reserves from the market. And if reserves are tight, that will cause stresses in the money market. And just to highlight, like I talked to a pretty senior front end rates trader, the other day, and he basically says, the market is currently in a position where like the standing repo facility could get tapped any day, like it's totally possible. And that is just simply as a function of the fact that we've just been issuing a ton of treasuries, and the excess cash in the market that you could observe in the reverse repo facility has been completely drained. And so if you're in a situation where the reserve market is kind of like at a tight point, it makes no sense to be doing QT. In fact, you're going to be synthetically doing QE if the standing repo facility like actually gets some usage. And so like it's a natural kind of like front end money market operation, but don't get it twisted. Like if the Fed starts injecting money into the system via the standing repo facility, they will just call it, like front end liquidity management, etc. But effectively, it is an expansion of the Fed's balance sheet. It is QE.
which is
They will
money printing at its core, right?
correct,
Yeah. Yeah.
correct,
So when they say they may halt quantitative tightening, tightening is them selling treasuries and securities into the market, right?
or just not
Or
reinvesting the
yeah,
proceeds of
letting them
maturing.
roll off
Correct.
basically.
Yeah.
And but that would, and to your point, this would be a first step towards some type of easing, whether by name or not, right?
Correct.
Like,
And there's already an inconsistency in Fed policy where, I personally, if you're cutting rates and you're talking about cutting rates much more aggressively over the next 6 to 9 months, and you're simultaneously doing QT, like I don't find that intellectually, honest. Because
yeah.
one policy is tightening monetary policy, the other one's loosening it. Like, which one are you wanting to achieve?
Yeah, they
Right?
should go hand in hand theoretically,
Uh,
right? So, yeah.
Correct. But the problem is the Fed balance sheet got so big during QE and COVID that it's just it leaves you with this like no, like how do I phrase it? There's a reason that gold has doubled, right, and is making fresh all time highs every day because the whole world knows that that Fed balance sheet number is by definition going to have to grow. It has to. If spending continues at anywhere remotely, close to the pace that it has been over the past couple of years. And that eventuality is just it's there. And so the idea of like, oh, you've taken the Fed balance sheet from like $8 trillion to 6 trillion and you had to stop. Or I don't know the exact figures. I think it's come off by like 2 to 3 trillion. But like you couldn't even unwind what you did during COVID. You're not even back to like kind of where you were,
He
and you're
wanted to
about to.
try. You're saying
You
got it
wanted to try.
so theoretically, you should be in a equilibrium where you, when in times of stress, you run it up big, but then in the good time, you bring it all the way back down to even or zero. That way, you can run it up again if you need to. But you're saying like almost like the debt, like it just keeps. He ran up 100 and pulled back 20, right? Like it's like the best they can do.
Yeah,
Uh,
and
Nothing
but
stops this train. It sounds like, honestly.
nothing stops this train. And here's the thing: like the administration has no care in the world about what's going on in like gold and silver and the debasement narrative that's pervasive across the market, right? Like I think Besant was asked about gold today, and his response was more buyers than sellers, right? Like these moves are absolutely insane. It's literally the world's largest asset right now, right? Like maybe I'm no
No, it's the
that's
largest
accurate.
asset by
It's the
far. It's
largest,
worth 30
and
plus
it's
trillion
moving
dollars.
2% a day higher.
Yeah. Yeah. Yeah, it's crazy out there.
One way you can think about it is the dollar's moving 2% weaker a day
Yeah.
versus the
Yep.
world's largest asset.
Well,
And I don't
that's
understand how that's not like alarming to folks, because what it signals is there's a massive policy error being made by, the largest economies in the world. And it's simply unsustainable. We've all known this, but it takes moments like gold ripping every day and silver mooning every day to actually get people to realize, like, what's going on?
well, I don't know, as you've said many times, if our policy makers will admit what's going on or even be able structurally to see it. But I'll see you in New York next week, my friend. And until then, Beimnet Abebe, our friend from Galaxy Trading, thank you so much.
Thanks for having me.